Yes, this is the foundation of the strategy. This strategy is the first level, and everything else adds on top of that level and keeps adding. So if you don't have the structure down, you can't really add a new level correctly or apply it correctly until you get that first level down. Then you can move on to level 2. So it's really important to get this down. The main three types of structure you have are swing structure, uh, inner structure, and complex market structure. Those are the three main type of structures. You only really need to follow the swing structure and inner structure. So what swing structure, what a structure is, it's basically how the market moves. So if the market keeps moving up, I'll have to explain this a bit more. So if the market moves up, it makes a retracement or a correction, it's called, and then it pushes back up, which is an impulse. The term is impulse. And then it makes a retracement, impulse, retracement. So this right here is an example of swing structure, basically. And what that means is you have a push up, creating this higher high point in the market, which is an impulse, and then you got this retracement or correction. And then when the market pushes up and breaks the previous higher high, which is this point, when it breaks that price and closes above it with a body close, that becomes a break of market structure. So I'll just mark that as BOS. So when this break of market structure happens and price breaks above the previous higher high, this point right here becomes a confirmed higher low. And this is a higher low because it's higher than this low right here. And that means this high right here becomes a new higher high because this high is higher than the previous one. So price made a correction and then impulsed up, breaking the previous higher high. So that would be another break of structure to the upside. So when the market keeps breaking structure to the upside, that means you're in a higher time frame trend. That means you're in a that means you're in a buy trend if it keeps breaking the highs and keeps making higher low points. So then this would be a new higher low, this would be a higher high, and then so the market can basically move in between this higher high and this higher low anywhere it wants, and structure won't change on swing structure until either this higher low breaks down or we get a break of the higher high. So if price retraces down, then moves up, that's what we're expecting to happen because price is in an overall bullish condition. Bullish just means buys. So then we would create a new higher high and a new break of structure, just like that. So that's a buy scenario of market structure, and sell scenario is the exact opposite. So we get a push down, an impulse, a correction, an impulse down, a correction, an impulse down. So it looks like that. So we get this right here becomes a lower low. We get the correction, the impulse that broke the previous low point. So we get a new lower low and a confirmed higher low. So that higher low right here won't be confirmed until the market actually pushes down and creates the break of structure. same thing. The market retraces or makes a correction, and then it could move anywhere in between here, and it won't be a confirmed higher low point until we break the previous lower low. So if we break that with a breakout structure, this then becomes a confirmed higher low. So yeah, then that would be a sell side scenario. So that'd be a sell bias because our overall direction we're looking at is sells overall, which is higher probability. That's how I look at it with the probabilities. Why would I take sells if the overall market direction is going up? Yeah, you might be able to take this little retracement for some sells, but that market could just push up anytime and continue its overall direction, no problem. So I try and stick with the trend. The trend is the best. Basically, what I follow is called smart money concepts or supply and demand trading. But there's so much info out there that maybe stay away from it a little bit because yeah, there's a lot of stuff on YouTube. But bringing these two concepts into a real market, I'm just gonna screenshot this here and send it into chat. Just explaining that video. So yeah, in a real in a real market, whole market swing structure looks like is we got this move down to here like that. Why is that double arrows? It should just be normal. So yeah, we get a move down to boom. We get an overall push up. We get a new move down that closed lower than the previous low there, just barely closed, so that becomes a break of structure. Market makes a correction or retracement up. It wicks the previous high but doesn't close above it. So then market finally goes, it tests the previous low point and makes a little retracement, but it doesn't actually break the previous low point to this point, to this move right here. So that's the overall down move, which is the break of structure, and this is swing structure, and I'll explain that in a second here. So that becomes a break of structure, and swing and inner structure or substructure is everything in between like this. So that's all substructure. All these little movements here. And I don't count one candle as substructure. It has to be at least two, and it has to have a decent size move. So yeah, this is like kind of all the inner structure here. That's still all inner structure. So we're just going over swing structure for now. It's the overall market movements that break the overall previous higher highs or lower higher, if it breaks the previous higher highs in a bias scenario or breaks a previous lower lows for a sell scenario. So market finally breaks with a break of structure, and then it retraces, breaks down, creating a new break of structure. So if I'm to mark this, that's our higher low, like that. That's our, what do you think it might be? It's a lower low. And this price went higher than that, but it didn't close. So that's alright. It's not really a higher low, but it didn't close, so I'm just gonna count it anyways. And then it made a new lower low, and then it made a new higher low right here, and a new lower low, and then a new lower low. And then it still hasn't really made that higher low yet, because this is our higher low. For the market to switch to a buy scenario, it would have to break this higher low point, and it never broke this higher low point till right here. So market kind of did this, moved up, kind of played around all weird like that on this specific time frame, which is the 4-hour. This would look a lot different in structure wise on the different time frame. So then market finally breaks the previous higher low and hasn't really broken the, or wait a minute, does it break this point right here actually? Oh yeah, it does. It does break it. So we get a new higher low, or new lower low right here, and this point becomes our new higher low. So our new point, if it breaks, if this happens, we would switch to start looking for buys. So our previous lower low broke to the left, confirmed our higher low point in market structure, and then market broke this with this right here, creating what's called a change of character or a chalk. And our change of character is just the first break of structure in the opposite trend, of the opposite of the previous trend, signifying a possible switch in trend. So it created this change of character, and price went higher than the previous higher low. So then, what do you think? If its price is higher than the previous higher low, what do you think that might be? It's going to be called a higher high, because this high is higher than the previous high point, which is a higher low. The market moved down, and then it could have easily broke this, making a lower low and continuing the overall sells, but price didn't, because it broke the high, making a bullish signal that price might want to switch, possibly. It's just probabilities. Doesn't happen all the time, but it might. In this case, it does work out. And then the market created that change of character, made the higher high, made a correction or retracement down, broke all the way up, making a new higher high that broke this structure point, which was our previous higher high. So market pushes all the way up to here, all the way up, and now it's starting to make that correction down. It made that correction. Now our expectation of price, because we're in a bullish scenario of market structure, is to continue making higher highs and hold our low points. So this would become a higher high, and then this point would become our higher low. So essentially, price could make a correction all the way down to this point before we look for sells again. So until it does, we're always looking for some type of buy setup, because our overall view went from sells into buys. So we're looking for buys in this scenario. And that's just swing structure. If you want to look at inner structure, that'll be a different video, but inner structure is everything in between the overall highs and lows in the market before the breaks of structure. So that would be all of this kind of stuff. Again, I wouldn't really count one candle as inner structure. It has to be a little, like, can't be a small move, and it can't be one candle. So this is kind of all inner structure, kind of like this. That's pretty small, but yeah, that's kind of too small. That's just a weird, wimpy little sideways movement. I don't know if I would count that, but so that's the inner structure, and we'll go over that on the next video. And that's about it for swing structure. and how I view market structure. Again, a higher high is only confirmed by breaking a previous higher high to the left, and the higher low is only confirmed when a new higher high is made. And then, yeah, that's about it. That's market structure and swing structure. And if anyone's confused about complex market structure and what it is, essentially complex market structure is just substructure at the end of the day. Because like all this price movement right here, that's all complex market structure because we're playing in the overall swing range of price. So everything within this swing range of price that happens is all substructure. So if we get the replay tool, this lower low happens, we get the push up, and so we're playing in this higher low right now, and we're not sure if it made this lower low yet. So we're looking to potentially try and look for sells to take out to make a new lower low and take that out. So price retraces up and still hasn't broken that higher low. We're still in this complex market structure, this substructural price movement within this overall swing structure range. That's what it is. Yeah, and then price does its thing. And yeah, that's complex market structure.